The cryptocurrency market in 2024 is no longer a speculative Wild West. It's a rapidly maturing financial frontier, attracting everyone from seasoned investors to sovereign nations. As traditional markets waver under the weight of inflation, rising interest rates, and geopolitical tension, crypto has once again emerged as a bold, high-risk, high-reward alternative asset class. But amid over 25,000 tokens listed on various exchanges, how can any investor identify the true gems, those with real utility, robust technology, and long-term growth potential? That's where expert analysis becomes critical. Not all cryptos are created equal. While some have solid fundamentals and developer support, others are driven purely by hype or meme culture. That's why we've distilled the insights of top analysts, venture capitalists, and blockchain developers to bring you a clear-eyed view of the top 10 cryptocurrencies to invest in right now, based not just on market cap, but on future-proofing, adoption trends, and technical momentum. Unsurprisingly, Bitcoin remains at the top of the list. With its fixed supply, global brand recognition, and growing role as a digital reserve asset, Bitcoin has evolved beyond being just a currency. It is now often considered digital gold, serving as a hedge against both fiat currency devaluation and centralized monetary policy. What makes Bitcoin particularly attractive right now is the combination of institutional adoption through spot ETFs and treasury reserves, and the recent halving event in 2024, which slashes new supply and historically leads to long-term price increases. As volatility decreases and regulatory clarity improves, Bitcoin's position as a core holding in any crypto portfolio seems stronger than ever. Next is Ethereum, the largest smart contract platform. Ethereum is not just a token. It's a decentralized infrastructure powering the majority of DeFi, NFTs, DAOs, and dApps. After the successful transition to proof of stake, and with upcoming scalability upgrades like dank sharding and rollups, Ethereum's potential for mainstream adoption continues to grow. Institutional investors appreciate its lower energy consumption, developers are flocking to its platform, and new Layer 2 solutions are driving transaction costs down. With rising demand and limited supply due to staking lockups, Ethereum remains one of the most undervalued assets in the market, with significant room for upside. Then we turn to Solana, a controversial but undeniably fast and cheap blockchain that many are calling the Apple of crypto. Despite facing network outages in the past, Solana has bounced back with a vengeance. Its throughput, developer activity, and DeFi ecosystem have all grown substantially. From gaming to payments and NFTs, Solana offers a user experience that rivals traditional fintech. Its architecture enables thousands of transactions per second at a fraction of the cost compared to Ethereum. With strong venture backing and projects like Helium, StepN, and Render choosing Solana as their base, it is positioned to become a dominant player in Web3 infrastructure. Another standout is Avalanche. With its innovative subnets, high scalability, and EVM compatibility, Avalanche offers institutions and enterprises a private yet interoperable blockchain environment. It's already being explored by traditional financial firms for asset tokenization, real-world asset RWA markets, and permission DeFi. As governments and companies seek more secure, scalable infrastructure, Avalanche is carving out a unique niche. Its strategic focus on partnerships with enterprises rather than hype-fueled retail narratives gives it a long-term advantage that many Layer 1s lack. Then there's Chainlink, the oracle of the blockchain world. While many investors overlook it, Chainlink is essential to the operation of decentralized finance. It brings off-chain data on-chain, enabling smart contracts to interact with real-world events like interest rates, asset prices, and weather data. With the launch of Chainlink staking and cross-chain interoperability protocol, CCIP, Chainlink is poised to be the backbone of a multi-chain future. As DeFi grows, so too will the demand for reliable, decentralized data feeds, and Chainlink is the undisputed market leader in this field. Polygon is another must-watch, especially as a scalability layer for Ethereum. With partnerships ranging from Starbucks to Disney to Reddit, Polygon is quietly building real-world adoption. Its focus on ZK rollups and Layer 2 innovation aligns perfectly with Ethereum's roadmap. Polygon's business development strategy, collaborating with major brands and governments, shows its commitment to creating utility-driven adoption rather than speculation. As more projects seek low-fee, high-throughput solutions that still benefit from Ethereum's security, Polygon stands as a gateway to mass adoption. Among newer contenders, Arbitrum is gaining ground as one of the most robust Layer 2 ecosystems on Ethereum. With high developer activity, strong liquidity, and native support for DeFi protocols, Arbitrum's optimistic rollup architecture offers scalability without sacrificing decentralization. It has become the default choice for many new dApps, and with upcoming upgrades to reduce fraud-proof windows and enhance user experience, it's set to capture even more value from Ethereum's growing base. Moving beyond infrastructure, we must consider utility-focused projects like Render Network. As AI, metaverse, and 3D content continue to evolve, the need for decentralized GPU rendering is exploding. Render enables users to rent unused GPU power to artists, developers, and AI researchers. It's not just a crypto project, it's a decentralized infrastructure for future media. With the rise of virtual production in film and real-time AI training, Render's use case is becoming increasingly urgent and valuable. Then there's Cosmos, often dubbed the Internet of Blockchains. Cosmos focuses on interoperability, allowing different blockchains to communicate without relying on centralized bridges or intermediaries. Projects like Binance Chain, Osmosis, and Secret Network are all part of the Cosmos ecosystem. Its modular design empowers developers to build custom chains while still connecting to the broader network via IBC, inter-blockchain communication. As the crypto world becomes increasingly multi-chain, Cosmos offers the framework to make it all work seamlessly. Last but not least is Hedera Hashgraph. Unlike traditional blockchains, Hedera uses a directed acyclic graph DAG structure, making it incredibly fast and energy efficient. What sets Hedera apart is its governance. Run by a council of major global companies including Google, IBM, Boeing, and LG. This unique model balances decentralization with real-world accountability. Hedera is also being adopted for enterprise-level use cases like supply chain tracking, carbon credit verification, and digital identity. Practical applications that go beyond the hype. What ties all 10 of these projects together is not just market cap or name recognition, it's purpose, resilience, and long-term viability. They represent different layers of the ecosystem: base layer protocols, interoperability tools, decentralized infrastructure, and real-world utility. Investors looking to diversify across sectors, from DeFi to enterprise, from scalability to AI infrastructure, would be wise to consider allocations in a balanced way rather than chasing only the loudest headlines. Of course, no investment is without risk. Crypto remains volatile and regulation is still unfolding. But in this emerging financial architecture, these 10 projects are not just surviving, they are leading. Whether you're a retail investor or an institution, 2024 presents a unique window of opportunity. As the old economy grapples with systemic debt, inflation, and digital disruption, crypto offers a bold alternative. The only question is, will you take the leap or watch from the sidelines as the next financial revolution unfolds?